I'm Mark Huffman. Learn more at consumeraffairs.com.
Money 105.5.
Views expressed on the following program are not necessarily those of this station, its owners, staff, or management. The following program is sponsored by Rob Warner at Guild Mortgage, NMLS number 825102. Welcome to the Happy Hour with Rob Warner, an hour of stimulating conversation adding value to your financial future. Rob brings helpful insights into many aspects of the mortgage and real estate industry. Now, here's your host, Rob Warner.
Happy Monday, ladies and gentlemen. Welcome to the Happy Hour. I'm your host, Rob Warner from Guild Mortgage, and I hope you all had a wonderful weekend and a great Monday. Today, my guest is Tina Costa with Hybrid Brokers Realty, and actually myself. We're going to talk about some loan programs today and some loan insights, so stay tuned for that. Anyway, Tina, how are you today?
I'm good, thank you. How are you?
I'm doing great.
Good.
So tell me just a little bit about yourself. I know you didn't really want to share a whole bunch about that, but kind of tell me something.
Let's see. As you said, I work for Hybrid Brokers Realty. I've been there a couple years since our inception. I've been a realtor for about 7 years now. Very much enjoy it. I'm a wife, a mom, soccer coach, soccer player.
Way to go. So let's get into the meat and potatoes of this whole thing. Talk to me kind of a little bit about the current state of our market out here.
Well, as most people probably know already, we've been having a very strong seller's market in the Sacramento area in most of California, and it's still been very strong. Traditionally, we have more inventory in the summer since more people decide to move then with the schools and such. And we are having a little bit more inventory, but we're still very low. When we have low inventory and we have a lot of buyers out, of course, it does create a seller's market. A lot of my information that I have today I got from Ryan Lundquist's blog. He's an appraiser in the area. He's had a blog that came out on June 15th. I'd highly recommend reading his blog if you're interested in the information. The current inventory stats are that we have less than a month worth of inventory for 400,000 K and less, which is really low. Normally we have a couple of months. So we're still seeing, especially in the lower price ranges, a lot of multiple offers and a lot of different competitive issues there with
I think
buyers.
that's been the pain for all of us, even on my side right now.
Yep. Mm-hmm.
Is having all the buyers waiting in the wings to try to buy the same property, basically.
Exactly, yes.
So I know you're a certified home stager as well. Can you share a little bit about that as well?
Sure, yes. A company that I have worked with a number of times that I've hired for different clients that I've worked with, Show Homes out of Folsom, came and did a presentation a few years ago, and I was really impressed with the work that they did. And like I said, I've utilized them many times for my clients, and I've seen the value in home staging. I kind of have a knack for it, so I decided to get certified. Home staging has been known to move properties quicker and for a higher price. It's pretty much guaranteed that you're going to get a higher price for your property and move it quicker if you do a really good job staging, and you can really see that in today's market.
So probably not many realtors have that background, so it must help you a lot, right? I'm sure it's a big plus when you're looking at a home.
Right.
Or looking to list a home, I should say.
Yeah, if you look at different homes online and you can see what might be appealing to buyers, you can definitely tell which ones are staged and which ones aren't, and which ones are going to be more appealing to the buyers that are out there shopping.
So how does staging, how important is it? I mean, like for a presentation, if you're listing a home, talk to me about that.
So the statistic that I learned when I was getting certified is that it's only about 8% of people that can really envision the potential of a property. The staging works in a number of ways. It shows how the space can be best utilized. It shows off the potential of the property, and it can help a buyer envision how they can live in the property. So if you, say, have a gym equipment in your living room, or your house is full of clutter, or it's painted some crazy colors, a buyer cannot necessarily see how they're going to be comfortable in that home or the greatest potential for the property. So when the property showed off at its most the highest potential, then it's really going to get you your highest dollar.
So when you're sitting down with a seller of a property, how do you have that conversation with them? I mean, you have to kind of be
yes. It can be difficult. Everyone has the way they like to live, and they think that their house is beautiful the way that it is. But then sometimes when you show them, okay, I want you to pick out the properties that you like here on the computer, which ones look best to you. A lot of times they're going to pick out the staged ones, and when you show them statistics and stuff, they really can get on board.
All right, so that's a good way of doing it, huh? You show them other properties and show them the difference in what appeals to them as well, and
right.
That way they can learn from that, I guess.
Right, and pretty much everyone's been to a new home, a model home that's been staged, and you see it one empty, and you'd understand that there's a big difference.
Very cool. So you have all sorts of talents. I know you're a short sale negotiator as well. Now, can you talk about that? Because we're not really in a short sale market, but it is advantageous to have that background, correct?
Right. Yeah. We don't see very many right now. A few years ago, say 4 years ago, was a majority of what I was doing short sale negotiation and short sale listings, because it was like 80% of the market when people were upside down. So everyone kind of knew at that time what it meant to short sell and to purchase a short sale. And you might not necessarily get a good deal because you were purchasing a short sale because there were so many, even though the prices were a lot less. But now most of the sales are equity sales. So sometimes I run across buyers that don't really even know what it means to short sell. It's when someone owes more on their house than it's worth, and there's a whole process that the seller has to go through in order to sell. And nowadays, if you can find a short sale available, it might not have a lot of interest, but you can get something at good value because the bank might let it go. Usually they'll let them go for less than market value.
Oh, you're still finding that
Yes.
Those still come in less, huh?
Yes, absolutely.
Just not to belabor the short sale thing, because I know there's not many of them, but how long does it take to get a short sale approved these days?
Well, the escrow process doesn't start until the seller's bank approves the process, and so that's what when we say bank approval, that's what we're talking about. So it used to be about 4 to 6 months. Now it's about 3 to 5 months until we get bank approval, and then we begin the normal escrow process. But it could be as short as a month, or it could be as long as a year.
Oh my gosh! Okay.
Yeah. So you have to be patient. But I myself purchased a short sale, and by the time that I waited my 6 months, I had about $60,000 in equity at the time that I purchased it. And that's hard to do right now in today's market. So
Okay.
It can be worth it if you have the patience.
If you're patient. So if
Yes.
you're a patient buyer, you don't have to be out of your house, in a certain amount of time.
Exactly.
That's might not be a bad way to go.
Right.
When you list a home, let's go into listing a home, because I know you represent listings and buyers.
Yes.
Share some strategies that you use with your sellers, could you please?
Sure. The vast majority of people these days are shopping online. So they get homes sent to them by a realtor, or they're shopping on the consumer sites like Realtor.com or Zillow. Sometimes before or after they have a pre-approval. And so they're going to look and see what houses might be appealing to them. And so having a good online presence for your product, which is your home, is very important. So when you see homes that say have some funky iPhone pictures, maybe the realtor standing in the mirror, or the lighting is bad, or they're very cluttered, then they're not going to be appealing to buyers. So you might not even get the number of people through that you want to view your home because your pictures aren't good online. So that's the first thing. You need to have really good pictures. The amount of money that we invest as realtors or as sellers on professional pictures is a small margin for what we can get the return on investment. So that's the first thing. We want to get people to come in and view the home, so it needs to have a good online presence. And then when get people to actually come in, the home needs to be appealing too. So I talked a lot about staging. So there's a lot of tricks that we do to present the home correctly. Of course, good lighting is important. A lot of times I'll go to show a home and the blinds are all closed. No lights are on. You go in, it looks like a cave. So open the windows, open the blinds. It has to, feel appealing to the buyers. If there's clutter, or even if it's dirty, so all those things are not going to appeal to buyers. So it's really important how the buyer is usually coming from an emotional place.
Okay, so you're trying to, and you have to make sure the house always looks that way, even when you're not able to show it, right? Because people are coming in with an agent with a lockbox. So.
Absolutely, yes. So if I'm showing 5 homes, and I can think of homes off the top of my head that I've shown, I've gone in there, and the person may be at work, but they have all the blinds open, the lights on, even have one of those Sensi's plugged in. It smelled nice. I remember that home got multiple offers at a time that we weren't seeing that in the marketplace.
Well, hold that thought, Tina. We'll be right back. We're taking a short break.
Adding value to your financial future, it's the Happy Hour with Rob Warner.
Fairy tales can come true. It can happen to you if you're young at heart.
That's right. If you're young at heart, that's what I always say. If you're young at heart. Well, we're back with Tina Costa from Hybrid Brokers Realty. We were talking about some strategies for listing a home that would make the home more appealing, and also talk to me about pricing strategies as well.
Yes, pricing is also very important. In the seller's market, some sellers might make the mistake of really trying to push the envelope with the price. But, as we were talking about, people start shopping online, and so they're going to set a maximum price. And so if you set yours too high already for the market in terms of the square footage or the condition, you're going to miss a lot of buyers that might be out there, the potential buyers shopping for your home. And then we also, as listing agents, do like to receive multiple offers because we want to have choices. Choices in financing for the buyer, and choices in the strength of the buyer in terms of how much they're putting down, et cetera. Cash buyers, of course, and if it's a VA loan versus FHA, et cetera. So, if you push the envelope on price, you might miss out on a lot of buyers, and then you're also missing out on having choices in terms of offers.
So it's important. It's better to actually come in a little low on your listing price and have offers drive up the price rather
Absolutely.
than be too high and what I always call chasing the market, right, where you're too high and now you don't get any activity and you're backing your price down, and by then you've lost a whole bunch of people.
Exactly. So you could actually be better off by going a little bit under because you have then competition between the other offers, which could push your price even higher that you might have thought you could get. So it's important not to overprice. And then we kind of have a strategy lately with this type of market, with the seller's market. A lot of listing agents will put the house on the market on Wednesday, and they might say, okay, no showings until the open house is this weekend. We're going to show this whole weekend, and then offers are due on Monday or Tuesday, and then we're going to make a determination. They have beautiful pictures, and the home shows nicely, and as long as they price it correctly, they're going to have multiple offers to choose from and choose the highest or send out multiple counter offers, and then there's so much competition there, and then the house is gone. So if you are doing that same strategy, but you're doing it too high, you don't get the outcome that you want.
So this way you've got a lot of interest in it, a lot of people that know there's other competing offers, right? So
Absolutely.
So that's really beneficial for the seller to do it that way.
Right.
I've seen a lot of that. My biggest pet peeve, not to go off on pet peeves, is when a house is listed like way too low to where buyers, in that price range, they're thinking, oh, we're going to get that house for, $250 when it's worth like $320.
Right.
And then it's like, oh my gosh, what a waste of time. It gets the buyers real frustrated because they're not even in that price range.
Wow, look what I get for my money here for this house. Well, just because someone's listed it for that doesn't mean it's going to sell.
Yeah, but I don't think that's what you're talking about. You're just talking about coming in a little bit below market maybe, or in a price range, because a lot of buyers, they look in increments, right? They'll look at 250 to 225 to 250 or whatever. Here at 260, they're not going to see it.
Right, yeah. So. Yeah, within reason. You're not going to go 60,000 under. If you're talking about a 350 purchase price, maybe $1 million. But, in the average home price, it's just a little under 350, the median home price, in Sacramento County. And so, you're going to want to be just under market value, really ideally, in order to get the most people through that you really can.
So talk to me when you're looking at offers, when you're receiving offers on a listing, how do you look at those? What are you looking at, like when it comes to the financing? A minute ago you mentioned VA, FHA.
Right. Yep. So from a listing agent / seller standpoint, we do kind of have a hierarchy. People think, well, maybe I can get a deal if I have cash. Cash is appealing for a seller and for us as agents because There's less red tape. It's not going to fall out because of financing. We don't have to worry about the appraisal. But it doesn't necessarily mean that we're going to choose your offer just because of that if we have a higher offer that's financed. And of course, conventional is always the next in line, kind of, because there's less red tape with the conventional versus FHA and the VA, which are government products. So if someone has a conventional loan and they're putting quite a bit of money down, that's going to be very appealing to the seller. The more money they put down, the less that the appraisal is an issue. So with this kind of market where we're pushing the prices and we're concerned about the appraisal, if we see, say, 30% down, that looks great to the seller.
And there's little risk, right? If the appraisal was a little soft, at least you'd still have a workable transaction.
Exactly,
correct?
yes. Versus someone that might be, getting down payment assistance and doing a 3% down, and they don't necessarily have the money to make up the difference in the appraisal value and the purchase price, which we're sometimes seeing in certain price ranges.
All right. Well, now let's switch gears, okay? Let's talk about buyer strategies, okay?
Right.
I mean, I've talked about this till I'm blue in the face about all these multiple offers, and it's hard because
Yes.
I've got borrowers that I can't get loans closed on right now because they can't find a house.
Exactly, yes.
So what do you do? Tell me.
It can be very tricky. It could be hard to explain to, as a buyer's agent, to buyers all the different little intricacies and nuances with getting your offer accepted. So we talked about loan type. I had a client recently, a veteran that just recently has come back from Afghanistan, and he was really wanting to use his VA loan, which they can be really tough. So because of the fact that unlike all the other products, the seller has to pay for a pest inspection, and then the pest inspection has to be clear, which means anything that the pest inspector finds has to be completed, which can be a little bit of an open checkbook sometimes, and so the sellers can sometimes be nervous about that. And of course, there's the appraisal that we have to worry about, which are a little stricter with VA. So sometimes that can be a negative to sellers, but in that case, we'd say, okay, write a letter and talk about yourself. People kind of scoff at that, but I've seen it work many times. So that loan itself might not necessarily be appealing to a seller, but the fact that he's using this because of this reason, he included pictures of himself, when he was in Afghanistan and such. So there's certain strategies like that. There's also the contingency periods that we have. So if you are working with a lender and they can shorten your contingency period for getting approved or waive that altogether, that can be very strong to a seller, which means that you're completely approved by the time you're going into the escrow process instead of approved 21 days later, which is what the contract actually calls for.
Yeah, I've noticed a lot of that. I recommend that all the time to my clients. If you can write a short contingency, your loan's all pre-approved. That's why I'll talk about that in the next segment, but having the loan pre-approved and being able to write a short contingency period makes all the difference in the world.
It does. And when we're looking at multiple offers, you might actually beat out someone with a higher offer because of these things that you do. Shorten the contingency periods or waive the contingency periods. So your offer can be stronger in other ways besides price. If there are no cash offers on the table, which, you're not always going to get that, you have to look at all the different factors. So your agent needs to know how to make a really strong offer and what all the different factors are.
So we just talked about on the listing side having nice, clean photos, right, and having the house look really cool, right?
Right.
But that can work in the favor of a buyer, right, if the pictures are kind of crummy.
Absolutely.
And explain why that is.
Yes.
Now.
So if you have the 90% of people looking at all these different pictures, and they say the 90% are going to look at the beautiful pictures, you have the only 10% that might go to look at the homes that have the not so beautiful pictures, the tiny iPhone pictures in the dark house full of clutter, and you show up to look at the house and there's a half empty wine glass and some cat food on the table, which I'm saying this from experience.
Okay. I wondered. That's a vivid picture you're painting there. Oh my gosh. So
it's you're excluding, because you're not presenting the home in the most best possible light, we should say. You're not going to get the number of people through that you might want. And so from the seller standpoint, that's a negative. From a buyer standpoint, you're losing a lot of your competition. So if you're having trouble, say you are using a VA loan or you don't have necessarily the most cash in your pocket that you'd like, check out homes that don't appear really great on the internet, homes that have been on the market more than 2 weeks, because in this market, those are the homes that are getting kind of stale. They get a little bit of a stigma. Well, they've been on the market a while. What's wrong with these homes? Or homes that have tenants in there. When there's a tenant in the home, the tenant doesn't necessarily have to be cooperative with showing the home. You usually need to give 24-hour advance notice. Sometimes they don't want to show at all. So if it's difficult to see it, some people just won't bother. And so you might, again, lose 90% of the people that would normally view the home. And so you can get a good deal or get accepted on a house like that.
That's a good tip. We've got about a minute and a half left, and I want you to give out your contact information now because I do not want to forget it, okay? So how do people get a hold of you?
My phone number is 916-949-4124. Feel free to give me a call or give me a text. My email is TLC, like tender loving care. They're my initials. Real estate 1, that's the number 1, at gmail.com. Again, TLC, real estate 1 at gmail.com.
Very good. I know we got very limited time. We were going to talk about kind of your feeling about big banks and online lenders, but we only got less than a minute. I don't know if there's anything you want to put out there on that real quick.
Well, again, as a listing agent, we don't like to work with the big banks or online lenders. Their service is poor. Their products are poor. We have a lot of times a lot of problems with them. And so as a buyer's agent, I really try to steer people away from using that. They're just not customer service oriented like someone like you is, where you're available more than 8 to 5 Monday through Friday. You're not in Missouri. That's, again, this is from experience.
Mm-hmm.
You have a lot of products that you can offer, and you're available for me to call, and you understand the market, which is important. So it's really tough as me as a buyer's agent if I'm working with people with not the most ideal lender, these large corporations and these large banks. So I really try to move away from that.
Very good. Well, we're going to take our halftime break. Stay with us, ladies and gentlemen. We'll be back after this break.
Bringing helpful insights into many aspects of the mortgage and real estate industry, it's the Happy Hour with Rob Warner.
Welcome back, ladies and gentlemen, to the Happy Hour. I'm Rob Warner with Guild Mortgage. And the second half, normally I have another guest on the second half, but today the second guest is going to be me because I decided I wanted to share some information, some helpful stuff about mortgages because, after all, that's what I do for a living. Anyway, I wanted to share about some of the newest and greatest things that are going on right now. And as my commercial just said about down payment assistance programs, they're not just for first-time home buyers. And one of them is GSFA Platinum Grant. It's a grant program, so you don't pay it back. Once you close the loan, the money it's a grant. So recently, the Platinum Grant now allows you to go into the higher cost loan limits. Not to get too boring here, but normally Fannie Mae is like 424, 100 on a conventional loan, but the high cost areas, Placer County, Sacramento, El Dorado counties, you can now go up to $488,750. And with this grant program, they're allowing you to take the loan amount up that high. And the income limits for Placer, Sacramento, and El Dorado County are $111,840. That's $111,840,000. So $111,840. That can be your income. So this grant program is really cool. It's for a Freddie Mac program, and it'll give you most of your down payment. So the only lacking thing at this point in time would be your closing costs, which can be negotiated with a seller, or you can get gift funds, or maybe you even have your own funds available for that. But that's one thing that has changed recently. The other thing that is a major change, I'm not sure I like it or not, but I'll put it out there, is that Fannie Mae, effective July 29th, is changing and implementing a new version of DU. DU is Desktop Underwriter. It's an online underwriting system that Fannie Mae uses as lenders. We use it to underwrite loans. Okay, at Guild Mortgage, we follow those guidelines implicitly. We don't have any overlays. So whatever that whatever requirements are given on that DU approval, we follow. Well, DU now, effective July 29th, will allow debt ratios as high as 50% on Fannie Mae loans, which, once again, am I happy with that? I don't know. It may be setting us up for problems. I don't know. But that's quite a bit. That means your debt-to-income ratio. That means your house payment, principal, interest, taxes, insurance, any homeowner's insurance, any flood insurance, plus your other debts you might have, car payments or credit card payments. That total amount of your monthly debt will now be able to go up to 50% of your gross income. So this is going to help a lot more buyers to buy right now, especially the ones that are right on the cusp, because pretty much Fannie Mae was at a 45% debt-to-income ratio. So July 29th, we'll see how that goes. It may help out a lot, and I'm sure it will, but once again, make sure you can afford your payment. Another thing that is happening, and this is happening, well, what else did I want to mention about that? There was something else on the Fannie Mae. Disputed trade lines. This is getting real technical now. Sometimes somebody will have a credit card that was late or something, or a collection account, and they'll dispute it, okay? They'll put a dispute on their credit report. And this can mucky up loans a lot, because if you have a loan in dispute previously right now, or as currently, like I have one now, where it's given me an approval on the DU system, but it is saying, look, this one account needs to be removed out of dispute. Even though it's got a zero balance on it, it's kind of crazy that it's asking for it, but it needs the account out of dispute so that the algorithms can read that trade line properly. So right now, that's a little bit of an exercise. You have to rescore the credit, get a letter, remove it out of dispute. But now, the new version of the DU that's coming out July 29th is going to look at these differently. It may allow you to leave these accounts in dispute. It's going to be on a case-by-case basis, so lenders out there, just make sure you read your DUs, because sometimes that fine print tells you to remove it out of dispute, and then you get in a contract on a house and you realize, I don't really have a DU approval. I got to get this thing out of dispute. So that's something. I don't want to get too technical on all this, but it's something to look out for. What else is changing? Beginning July 1st, Experian, Equifax, and TransUnion will not be reporting civil judgments and tax liens on the credit reports anymore. Now, this on the outside looks really rosy. Well, this is great. The borrower's got a tax lien. We're not going to see it on a credit report. What you have to realize, and this is so important, I see lenders blow deals all the time with this, it may still show up on like a fraud guard. Like at Guild and all lenders, we run a fraud guard. We run a report that most borrowers don't know gets run behind the scenes. And that fraud guard will show whether you have a tax lien or something, or a foreclosure or anything. It shows all sorts of stuff, but it may show this civil judgment or tax lien on there. And if it does, and that lien supersedes the lender's position, then it's going to have to be paid off, or the tax lien have payment arrangements set up with the IRS. Just remember this. Some lenders that aren't technical. I'm real technical. I'm not bragging here, but I'm technical. So, you got to do your homework. One nice thing about using me is I run fraud guard on my borrowers up front early on, so I know if there's anything in the closet, shall we say, behind the scenes that may affect the loan later. Some lenders run it when it gets into underwriting. Now you're 2 weeks into a transaction. So I wanted to talk about that, not reporting that. I wanted to talk about student loans. As everybody knows on this show by now, student loans are a big hang-up for a lot of borrowers because of the way they are structured. And the lending guidelines have changed back and forth numerous times just in the last 6 months when it comes to student loans. For instance, right now, Fannie Mae, if you have an income-based student loan, meaning you only make like $40,000 a year and your payment's only $10 a month on your $50,000 student loan, I'm being a little radical here, but if it was, you would only have to count that $10 payment as long as it's on a credit report. But if it's not on a credit report, then we have to assign it like a 1% of the balance. So if you had a $50,000 loan, that's a $500 payment, so it can really mess up your deal. It is really important, I can't stress it, to have this, the credit report run by a lender that knows what he's doing, like myself, so we can look at that student loan and know how it's treated. Because if it's in a forbearance or in a deferment, we still might have to assign a payment to it. So it's really, really, really important that, things like this get caught early on before you get in a contract on a home. Because there's a lot of loans, and you probably know this, Tina, right, that there's a lot of deals that fall out.
Absolutely. Yeah, that's the biggest reason that we see with homes coming back on the market.
And I always shake my head. I go, how can somebody be in contract and then have their loan decline? I don't get it. I guess to me it doesn't make sense. You probably see this, right?
Yeah, in fact, it happened to me this year, and it was with when the buyer wasn't giving the required docs prior to us getting an escrow, and so we were going off what the buyer stipulated what was happening
on the phone, right?
Yes, with just verbally, and also there was language barrier and such. When the documents came in, they didn't match what the buyer had said, and then when there was employment verification, it didn't match as well. And a lot of these things are done right before docs come out as well. Things are verified again by the lender. So when it doesn't match up, the lender might be alerted for fraud, and it just might not happen.
That's why it is so important that you do this early on. If you're contemplating buying a home, please, I implore you to get all your documents and review them, because what inevitably happens, like 100% of the time, is you go out and you say, "Oh, I'm not buying for 30 days," and then suddenly you see something on the internet that looks appealing, and now you want to write an offer, and now you're having to do all this with just a phone call over the phone because you don't have time to get all the background checks done.
Right, yes.
And it's really not the way to do the transaction. It's better to have everything done up front. That way there's no glitches. Nothing worse than getting in a contract and find out you can't buy a home.
Right, yes. In fact, not only do we always say you should really be pre-approved before looking at any homes, especially in this market, but it's really important too when the lender asks for your documentation to get it in as quickly as possible. And when I was speaking about lenders getting totally approved and being able to waive that loan contingency, which can be huge, getting your offer accepted in this market, that's when all the documentation is in, the lender has everything they need. So I was working with a buyer, and she said, well, we don't really have we'll get all our paperwork in when we're in contract. And I said, well, you know what? If you do it this way, it's going to be better for you, better for everyone. And it was a very smooth transaction, and we were able to get accepted because we had waived that loan contingency.
So it's huge, and I'll say it over and over and over again, but it's worth repeating.
Yes.
So I'm not going to go over all the student loan guidelines as much as to say it is very, very important to have that all dialed in on these student loans, because if you don't know what loan program you're doing up front, you may think you're qualified and you're not. So, and then if you change from an FHA to conventional or back and forth, the guideline changes, and all of a sudden, it's just got to do your homework.
Right.
So anyway, also I wanted to touch real quick. I don't know how much time I got before the break. I've got 5 minutes. Okay, so I'm good. I'm rushing here. So piggyback loans. I want to talk about piggyback loans, because one of the main things that's happening in this market right now, there's people that own an existing home and they want to sell it and upgrade, okay? So they want to buy a larger home. Well, their biggest fear is, I sell my home and then I got to go rent a motel or go move into a short-term rental, because what happens if I can't find a house in time? Okay, you probably hear this all the time too, right?
Mm-hmm.
I mean, over and over again,
yes,
right?
Especially with this low inventory. Well, I sell my house, but what am I going to buy? I can't find one to buy.
So there's an option available, but the option, naturally you have to have the income to do this. But if you have the income to pull this off, this works really sweet. You can put like a 5 or 10% down payment on the house you're purchasing, and then have what they call a piggyback loan. That means you're having your first loan. Well, let's say you're buying a house for $300,000. Let's say you're going to sell your house. I'm going to use round numbers, and you're going to get $100,000 equity out of it. Okay? And you're going to buy a $300,000 home, and you're going to put $100,000 down. But you don't have that $100,000 yet. You could put $30,000 down, and then get a $70,000 second loan on it. I'm not using a calculator, but I'm sure that would work. And then basically, when your house sells, you can pay off the second loan and have just one nice, have that $200,000 loan that you wanted to begin with. Am I making sense?
My dad actually asked me a similar question a couple years ago. I think it's kind of more old-fashioned. Is that the same thing as a bridge loan?
It's not a bridge loan. Would be a loan against the house you're selling. So you would borrow money on that house in
Okay.
order to buy another house. And we don't do bridge loans at Guild. There's probably some people out there that do them, but the thing with the bridge loans is there's like a couple points, they're making some money on them because they're not going to do it for free, lend
Right.
out the money for 6 months or whatever, and then not make any. It's not that the interest rate's so radical on it, but they're making some upfront points. With a
yes.
piggyback loan, you can just do it all as part of your transaction. Then when you sell your house, you just pay off that second.
Okay.
I have one right now today that I was talking to the borrower on. I suggested that, but you have to have the income to handle the old payment on the old house as well as the new payment. And if you do, that's another really pretty good way of going about it. The other thing is, nope, we're not going to go down that road. I was going to mention another way to do it, but if you're not selling the house that you live in now, you can always, rent that house out if you're not planning to sell it for a while and get a lease agreement on that house, and then you can offset the payment on that one as well. But that doesn't accomplish the same thing as what I was talking about on a piggyback, so I probably shouldn't have gone down that road right now, but I figured I'd throw it out there because that's what I just mentioned to my other borrower. Those were his options. Either do a piggyback loan or rent your house, and get in, but then he's going to have a higher payment for a while until maybe he sells his house down the line. But these are some thoughts. What else did I want to cover? I want to cover a cool program that Guild has right now, okay? I don't talk about loan programs very much, folks. And the reason I don't is because every lender's got this nifty loan program, and I always feel like it's dangling a shiny object in front of somebody, and it's too good to be true. But anyway, I'm going to maybe start on this right now, but I've got a minute left before break. But we have a program that allows a 1% down payment right now. Okay, it's a 1% down, and Guild puts out the other 2%. So it's a 3% down loan, but Guild is putting grant money up for 2% of that 3%. So the borrower's only requirement is that they have a 1% down payment. But I'm going to finish talking about that in a minute. We're going to take a short break. We'll be right back. Stay with us.
Showcasing local business and adding value to your financial future. It's the Happy Hour with Rob Warner on Money 105.5 and Money1055.biz.
Welcome back, ladies and gentlemen. I'm Rob Warner with Guild Mortgage, and today you get 12 minutes of my time or whatever it is, or 22 minutes, because I wanted to share some neat stuff. But before the break, we were talking about Guild having a 1% down loan program. This is a little different than the program I originally mentioned on the lender grant, the GSFA lender grant. That's an entirely different program. The one that Guild has it only goes to 100% of area median income. So I don't have the chart with me. I didn't bring it on the show today. But it's roughly like $69,000, I think, for the income in Sacramento. It might be $68,900. It's don't quote me on it, okay? But it's somewhere very close to $69,000. You have to have 1% of your own funds in the transaction. You have to have a 680 FICO score. It's not just for home buyers, for first-time home buyers, I mean. And home ownership education course is required. But Guild is putting up to 2%, and the neat thing is we're not raising the rate to do it. So you're basically getting the same rate you would on a regular, conventional Fannie Mae loan on this program, but only with a 1% down payment. So I know you had some question about that, huh, Tina?
I do. We try to stay, especially with, we try to stay up on all the different programs for grants and such, and down payment assistance, especially when buyers say, well, I just don't have the money down, and when we try to give them options. And I know there are different programs that come in and out of the market, and I wasn't aware of this GSFA Platinum Lender Grant. The last one that I was aware of was Cal Hoffa.
So Cal Hoffa, and I didn't bring it up today. I didn't put it on my list. I talk about it a lot, but the Cal Hoffa, California Housing Finance Agency, is another great down payment assistance program. The only difference with it is it's a loan. You pay it back, but you don't have to pay it back on a monthly payment basis. It is comprised of two loans, one at like 2.5% simple interest that accrues the interest over 30 years. So it's due in 30 years, but no monthly payment on it. And then there's another loan called a ZIP loan, zero interest loan, where there's no interest on it, but the principal on that loan is due in 30 years. So the Cal Hoffa is a really, really great program if you really don't have any money. I mean, you may need $800 or $1,000, but that's about it. I mean, you can use the CalHFA loan on an FHA loan or a conventional loan with only 3% down and basically have hardly any money in the transaction, get most of your deposit back. But there's loans, whereas grants are not payable back. But
5% total, correct?
What's that?
5% total
On what?
that you get from CalHFA. So if you're putting down 3.5% and you get 5% from CalHFA, it can then cover some of your closing costs.
Oh, okay. Now you're getting technical. You can use CalHFA. There's 3 different versions of it. You can use it just for down payment assistance, part of it, or just part of it for down payment, and then come up with your own closing costs. Or you can do both loans I talked about, the 2.5% and the zip loan, combine them so you'd have a first loan, a second loan, and a third loan. And the second and third loans, the second loan would cover your down payment, the third loan would cover your closing costs.
Oh, okay.
And basically get into a property with, well, like I said, I don't want to say nothing. I've had it happen before, but I like to tell people under $1,000. That's pretty realistic.
Yeah.
So that's a cool program. They all work differently. You just have to have your borrowers or your buyer call me, and I will go through it with them because each person is different, has a different scenario.
Well, the income limits are lower with CalHFA, correct?
Yes, the conventional CalHFA, the income limit's a little higher. Now, CalHFA, let's go back. The Platinum Grant, that is just a set amount of income you can make a year. It doesn't matter if you're one person or 5 people in your household. And same with the Guild 1% down program. It's not family size. But CalHFA is based on family size. And once again, I don't want to rattle off all the income limits. You can call me. By the way, my number is 530-391-1554. But the CalHFA loans are based on family size. So if one person maybe 63,000 and 5 people maybe 85,000. I mean, I'm giving rough numbers here, but The higher the family size, the greater amount of income you can make.
Right.
Okay, so that's all I'll tell you. If you want information on that and it's appealing to you, I'd be glad to go through it and figure out if you qualify for it. Hey, I wanted to talk about some stuff. This is kind of real estate related, okay? But I used to do like seminars, and one of the things that I did one time was 5 easy steps to buying a home. And Tina, you and I are going to go through step 1 today, but I'm going to go through these steps. I'm just going to rattle them off real quick, okay? The first step is decide to buy. The second step is hire a good realtor. The third step is to secure financing. Fourth step is to find your home and make an offer. And what is the fifth step? Is prepare for the closing. Okay, those were my 5 steps to buying a home. But one of the things I realize with people is the first thing you have to do is decide to buy. Do you know what I mean by that, Tina?
Right. You have to have the right mindset.
You do. If you haven't decided to buy, then it's kind of like, I don't know. You just got to come up with that. You have to decide to buy.
It's a process. It's stressful, and there are a lot of steps, and this market can be tough. And so if your heart's not in it, you're not going to get to the end point there.
But I had like 6 fears and facts about buying a home, and if I'm talking fast, I'm sorry, but there's limited time on this show. But fear 1 is I can't afford to buy a home now, And the fact is there is always a home you can afford to buy, right?
Right.
So, if you're paying rent right now, you can afford to buy. So the thinking on it is the earlier you buy, the earlier you will benefit from equity buildup, right? Because right now
and
you're making your landlord's payment for you, and even if you get into something that may not be perfect, you're starting to build equity in an investment for yourself.
Right.
The fear 2 is, should I wait till the real estate market gets better? Well, in this market, what I'm hearing from is, should I wait for prices? Are they going to soften, right? That's what I'm hearing from people. Oh, it's pretty high right now. Should I wait? Well, what do you think about that strategy?
Well, I had quoted Ryan Lindquist, and he says to people, when people ask him about the market, my crystal ball broke a long time ago. It's like, who knows when these prices are going to go down?
So, bottom line is you may wait. Prices may soften a little. You may wait to save your 20% down by then. Either the property's gone up 20% or the interest rate's gone up 1% or 2%. So, it's all you need to do in the short run is to find a good buy based on your needs and what is currently available, and make sure you have the financial ability to hold it for the long term. Okay, that's the suggestion on that. Fear 3, I don't have the money for the down payment. Fact is, we just talked about all the down payment assistance programs, right?
Mm-hmm.
Fear 4, I can't buy a home because my credit isn't very good. Well, fact is, we have, and I'll toot Blue Water Credit, they're a local credit agency. We have agencies that can help you repair your credit. I can even offer suggestions on cleaning up credit. So sometimes there's just small things you can do, just affect a balance on a credit card or whatever, get your score up high enough. We got 4 minutes, so I'm clocking along fast here. Fear 5, I can't afford to buy my dream home. Well, don't buy your dream home for your first home if you can't afford to buy it. Buy a home. Get into the market. Start investing your money into something. It will be a lot better in the long term because eventually the long term, the real estate prices will go up even if they did soften for a spell. Fear 6, buying a home seems way too complicated. You probably hear this, right, Tina?
Well, if your heart's in it, then you overcome that.
Right. So fact is, you need a team of professionals like yourself,
Absolutely.
Tina, like a good loan officer, like I'm not bragging here about myself, a home inspector, a good escrow company, a team of people to back you up to make that process easier. So there was some other things I had in here. Does it make more financial sense to rent or buy? Well, you can weigh out those options. You can talk to your accountant. You can find out, well, I'm going to get a tax benefit by buying versus renting. Does it make sense? Do I have my finances in order? That's another thing. Get your finances in order. I mean, I have out here write out a simple budget. A lot of people don't know how to write out a budget, but it's like write out every expense. Write out your utilities. We don't qualify you based on utilities, but you write out your daycare, write out your utilities, write out your cable bill, write out everything that costs you to live, your food, your groceries, your gas, and do just come up with a number and figure out what kind of money you have left over, to pay toward a housing payment. It really helps you out to feel comfortable about, what payment you can afford versus what payment you can really qualify for. The other thing decide how much you would like your payment to be. Well, that's what I just covered. Figure out your payment, know what you can really afford. All right, Tina, do you agree?
Yeah, a lot of people are focused so much on the price of the home, but the vast majority of us are more concerned with the payment every month that we have to make. So you need to have a good lender that's going to tell you, well, okay, $400,000 with this amount down and this interest rate, my payment's going to be here. So when you're shopping for a home, you know where you're going to be comfortable. Maybe you're approved for $450, but you're more comfortable with the payment for $350. So that is extremely
Exactly.
important.
Know what you can afford. Exactly. Do I have any savings? Well, we get back to you. Is my job stable? There's no stupid questions out there, okay? It's just you got to ask the questions because this will really help you to decide whether you want to buy or not. That's the first step, deciding what you want to, deciding to buy. And then you go from there, what you want, what you need, what you can afford. I'm repeating myself here. But anyway, I'm running short on time, so we're covering step 1, and I think every week I'm going to go through these 2 steps, or all these steps, just so everybody's educated. Anyway, in closing, my name is Rob Warner. I'm with Guild Mortgage. My number is 530-391-1554, and I'd like Tina to give out her contact information again. Tina's a great resource, by the way. Her and I do business together.
Thank you. My number is 916-949-4124. My email address is tlcrealestate1@gmail.com.
Ladies and gentlemen, have a great week, and listen to my show next week. We're going to do a 4th of July special show, even though it's on the day before 4th of July. You'll find it very interesting, okay? Take care.
Guild Mortgage Company is an equal housing lender, NMLS 3274, licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act. Rob Warner, NMLS 825102. All loans subject to underwriter approval. Terms and conditions may apply, subject to change without notice.